premiums that we've seen the U.S. Mint's charter in not being able to pay above the worldwide spot price of silver in order to accumulate 1,000-ounce silver bars. And so,
well, I appreciate that, and we will dig right in because certainly something I've been looking at, I'm sure a lot of other silver investors have been looking at as well, is the premiums on the Silver Eagles. I look at some of the online dealers. The other day I calculated 68%. It was $15 over spot. I look at the U.S. Mint website. They have some of their fancier $67 versions of the coins available. Nothing at anywhere close to the spot price. So I was wondering if you could explain what on earth is going on there.
Yeah, I mean, look, the U.S. Mint has for the past couple of years been the model of inefficiency. And as it pertains to, for sure, their Silver Eagle program. Their Platinum Eagle program, I guess you could throw into that, and that goes back to 2008. But the problem is that you have the Sunshine Mint that is responsible for making the blanks for the U.S. Mint, but they're also making blanks for a good portion of the world's sovereign mints, like the Britannias, like the Krugerrands. I think if I'm correct, I think it's only the Kangaroos and the Philharmonics in terms of the six main mints, global mints, that are not blanked or made into planchets at the Sunshine Mint. In other words, the Sunshine Mint, I think, is working 24 hours a day, literally, to keep up. So it's a question of not being able to get enough in the way of planchets, which is the blank discs that are that become the coins. And there's also the issue of, with the high premiums that we've seen, the U.S. Mint's charter in not being able to pay above the worldwide spot price of silver in order to accumulate 1,000-ounce silver bars. And so they end up with, I think, a situation where maybe I don't see, maybe they don't have a profit motivation, and they have a situation where the main source of blanks coming from the Sunshine Mint is they're spread too thin, the Sunshine Mint, providing blanks plus their own rounds to the public to many of the sovereign mints. So it's just an issue, I think, of the inability of the mint to secure planchets in a timely fashion and to secure them at a good price. So the numbers coming out of the U.S. Mint and silver are horrific. And in terms of the amount of demand that we would see in other sovereign mint coins priced at a fair value, like Krugerrands, like Philharmonics, like Kangaroos, the U.S. Mint coins have not been below $10 an ounce over the price of silver in 2 years. And I scratch my head trying to find out what the reason may be. And it has to be something in the lack of available planchets making it to the mint from the Sunshine refinery, and somewhere between getting the 1,000-ounce bars and getting the planchets at a fair price in a timely fashion has made the U.S. Mint really the worst performing sovereign mint in the world, in my opinion, for silver 1-ounce coins, and it's been that way for the past 2 years.
And are we seeing similar conditions at the other mints, the other sovereign mints around the globe?
Not really, which is the weird thing. Maybe those mints have the ability to buy silver at a slightly higher price than the U.S. Mint does. The U.S. Mint would need to get the authority from the Secretary of the Treasury, I believe, in order to go into the open market and pay a higher premium to purchase the 1,000-ounce bars, which are then turned into planchets, or the blanks, as they're blank discs that are then stamped into coins. But when you look at all of the other coins, the other 5 primary mints, Canada, Australia, Austria, South Africa, and the United Kingdom, they are all priced roughly half the price, premium-wise, if not two-thirds the price of Silver Eagles. Look, I'm one of only 27 U.S. mint distributors or authorized resellers in the world. I have an affinity for Silver Eagles, but it's very difficult for me to recommend them to people at these inordinately high premiums, especially as to your question, when you can buy all of the other sovereign mint coins for anywhere from $5 to $7 an ounce, if not more, cheaper than you can the American Eagle. Which, you know, here again, if the UK and South Africa are sourcing planchets from Sunshine Mint, why can't the U.S. Mint do the same thing and offer them at the same price? It's somewhat of a mystery, Chris, and bottom line is it's only hurting the U.S. Mint production numbers. And, you know, they're pale in comparison to what they would be if they were priced at the same price as all of the other sovereign mint coins. Canada, Austria, Australia, South Africa, United Kingdom, they're all better values, and they're all more efficient, at least in terms of their production, and it's translating into much, much greater demand for all of those coins. So all of that money, all of that profit, all of that demand is flowing outside the U.S. to other entities rather than to the U.S. Mint, which one could argue is one of the only profit centers for the entire U.S. government. So inefficiency at its finest, for sure.
They managed to make it unprofitable. Sounds just about right. Also interesting when you mentioned they don't want to have to go out and pay above market. I don't know, why can't they go to the COMEX if that is the case? Sounds like another institution looking at a COMEX price that offers very little insight into anything. Although that aside from the U.S. Mint, what are we seeing in the premiums of the other products? I know junk silver has been elevated. I look at the online dealers. I see Buffalo's $6 over. Seems like things are high. What's going on with some of the other products?
Well, it won't be very long before you can say that about us as being online, and we're making great progress in our website that very excited to roll out here very soon, as a matter of fact. Those premiums have come down for the first time in all of 2022. With the sideways and zigzagging and downward trajectory of silver over the last several months, I think we've seen a little bit of waning of demand. And I guess you could look at that as an expansion into the mainstream, who has been a little disenfranchised at the silver they bought at the height of the silver squeeze, has really not performed the way that one would expect in this inflationary, chaotic environment that we find ourselves in. Although it will, and you and I both know that, I think there's been a little bit of a pullback. When I look, in fact, I did a little exercise yesterday and noticed that over the last 10 years, May is the slowest month of the year for the last 10 years. Every single year, May has been the slowest. And I think that's, largely in part to people wanting to get outside and open up their cabin and plant their garden and get away from the stresses of life and get outside. And so we see a slowdown in May. And with that, we've seen a little bit of pullback on premiums. Right now, we have junk silver right around $8 an ounce over the price of silver. And all of the 1 ounce silver coins, Philharmonics, Kangaroos, Britannias, they're all going to be right in the $5.29 range over the price of silver. So when you take a look at Silver Eagles, even back dates are $10.75 over. The current 2022s are going to be higher than that. So is it worth it to pay double premium for a Silver Eagle? I would argue it's not. I mean, there's a lot of reason to own Silver Eagles and a lot of benefit to it. But if you can buy a coin like the Kangaroo as an example at $5.29 over, that's the purest silver coin in the world, one of only 2 4.9 fine pure silver coins. So those coins are better values. We've seen a little bit of a pullback in premiums because May has been a slower month. It's ironic that I say that, though. In talking with my CFO yesterday and doing this little exercise, it felt as though May has been such a slow month, yet we're 20% above. May was 20% above 2021's May, which 2021 was the biggest year we've ever had. We're already ahead of 2021 numbers in total, and May was ahead of 2021's numbers. But May is the softest month of the year for the last 10 years. I expect this to be short-lived. I expect to see premiums rise again. And I say that to you, Chris, because people still believe the Fed is going to be able to engineer a soft landing, that the Fed is going to be able to walk the tightrope between inflation and interest rates. And I don't. And I think when the realization comes that they're trapped, and either we destroy the dollar or destroy the markets, and the mainstream begins to realize this, they're going to have to realize the legitimacy and the validity of adding precious metals, and in particular silver, to the portfolio. That's when premiums spike right back up again. So I guess you could say this is kind of a soft spot or a sweet spot and has been traditionally for the past decade in what I would believe would be the low point for premiums moving forward the rest of the year.
Well, it sure is quite an unusual situation, especially what you mentioned with the Fed, where Bernanke and some of the other guys, they're talking about normal interest rate being in the threes. They're not talking about normalizing back to pre-Lehman balance sheet ever. CBO budget projections show average interest expense 10 years from now, they're looking at 2.5%, 3%. So I think it's going to take a lot of printed money to fuel that, and we will see how that goes. Certainly an exercise in patience at time with some of these financial markets. But, Andy, before we wrap up today, for people who are interested in purchasing silver, is there any particular product that makes sense right now that you have that people would be wise to look at?
So, look, we do have some product that's less expensive than this, Chris, but there is one thing that I really, really, really love, and it's the 10-ounce silver Australian kookaburra. And I have those in stock right now, and a good number of them. They are more expensive than a lot of the other sovereign mint coins, but they're going to be at $5 an ounce over the price of silver. But if you want something special that most of the companies in the industry will be selling much, much higher,